Hey, everybody, thanks for joining us back here on our little talks that we like to have. John Tripolsky from the Teaching Tax Flow team, joined back again by Mike Reeves, CPA from Integrated CPA Group. We have an awesome topic we're going to talk about here. If you read the title, heck, you don't have an idea what we're going to talk about. Let's be honest, but hopefully, wherever you see this at, if we were a Tinder profile, hopefully you swipe right, I believe is the one for liking and connect, whatever it is. I haven't been on there. So hopefully you've done that. But let's not waste any time. Mike, you are killing me with this topic. I am so excited to get into this one, man, because we're going to have some fun, and I'm sure people are going to learn something. So what do you got for us today, man? What are we talking about here?
Today is a journey. Today is a journey at which we start to come together as an individual in business, typically a business owner, could be somebody else, and we start to connect with our accountant. And we start to create relationship with the accountant, understanding each other, what our objectives are, typically surrounding financial data. And together, we're looking to create some kind of financial statement, typically. That could be in a tax return. It could be some kind of internal financial statement, perhaps audited financials. But somewhere where we start and where we get to that end result, there's a lot of communication and effort that has to go, and it's a journey. So that is where I'm going to take this. Now, before I begin, I want to kind of tell a kind of an old tale story at which how maybe a tax return would have been prepared years and years ago. Individual from business comes up and they get a tax return done, and they bring in all of their documents and they say, "Oh, accountant, I need help. I need to do this tax return." And back in the day, perhaps one of those methods in terms of how you transported all your stuff was a shoebox. You just stuffed all your documents and your papers in this shoebox. And you said, "Here you go, accountant. I got everything. Good luck. I'll see you later." Well, in the year of 2025, we've come a long way. In fact, we probably don't even meet with our accountants in person sometimes. We're all virtual. We have virtual platforms but this concept or idea of saying, "Hey, here's my shoebox full of sheets," I guess is what I should be saying. It still exists even in today's society, and we are going to try to walk this path and walk this journey of understanding, what do you really need? What are some of the landmines in the way that this relationship goes awry, and how we can work together to really take this shoebox, get rid of it, and provide some really good information and really good info to our accountants so we can work together and start even working on value add conversation.
This is awesome because I can basically picture a very sheety shoebox, right? Like if everybody's just collecting stuff in this thing, they're like, "Oh yeah, this this looks like a expense I need. Yep, throw it in the box." And it just kind of piles on itself to where, it looks like the side of a mountain, right? You got like different layers that just kind of build up over time, and who knows what's in this thing. I'm sure, I am almost positive, right, that back in the day, an accountant would get this thing and just like kind of like peer, whether it's a folder or a shoebox, they just kind of peer into it like, "Oh man, am I going to get like attacked by something?" Or, "Oh crap." I've heard stories of thermal paper, right? This box or a folder being left in the sun, or left in a damp, and the thermal paper, like a receipt completely disappearing. And off it goes, right? What are you going to say? Like, "Oh, there was one here, and I don't even know what this was for." But I can only imagine how bad that was back in the day. But also some people, whatever, by choice, they still do it now because you see it on the front of doors saying, "Drop-offs welcome." That's the last thing I'm sure you want to deal with are drop-offs necessarily, because they're not dropping off, anything that's really prepared. They're probably dropping off the sheety box, right?
Typically. But, again, along the way, there is a lot of evolution that goes along with this, right? In terms of, I think we all kind of start from a shoebox on really anything, certainly finance, because a lot of the time in business, we're really good at doing a lot of different things, and it might not necessarily be accounting and financials, and that's okay. You don't have to be an expert at it. But I think what gets us going and gets us out of the box, I guess you could say, is, learning to be organized, systematic, and really just knowing enough to be dangerous. You're not an accountant. You're not a CPA. You don't have to be. And that's not what the ask is. But how can we continue to move forward from that time where there's a drop off, and then all of a sudden we've got something that's better and we're gaining rhythm and flow. Let's start with the expectation, though. I mean, at the end of the day, the expectation is to accurately report what happened in the business financially. We, in today's society and the way things have grown, we do that with a financial statement. And financial statements probably make more sense to accountants than they do other people. There's bits and pieces that we understand from them. We don't have to be financial statement experts. We want to work with our accountant, though, to understand them. And the more time and energy and bandwidth we have to let us have that conversation versus getting in the landmine of a shoebox, the more value you're going to get out of that.
And that's something that,
Example, yeah.
also too, I imagine, right? Like, I just have all these images in my head, right? Of somebody like carrying this box like a football, just like running with this thing in the rain to get it to their accountant, to then their accountant look at it and say, oh, this is a disaster, but I need to get to the point where I'm comfortable with if that's a financial statement. But these statements are a lot different than, say, a bank statement, where it's not just up here, don't worry about all the rest of that. Just look at the bottom. There's boom, like you had mentioned, there's basically a DNA to these statements, right? And like knowing where it derives from, what changes can be made, how things are impacted on each side. Like you tweak this little knob here, and what changes over here, what changes up there. It's knowing beyond the financial statement. I guess what I'm getting at is super important for that relationship, right? And expectations, right?
Mm-hmm. Very much so. And keep in mind that depending upon the type of accountant you're engaging with, they might expect a shoebox. Now, hopefully you're still providing it in a better format, but they might be the person that's going through lots of different things in this box versus different accountants may be looking for something else. In our tax practice, we're working on preparing a tax return. So I don't need every single receipt. I don't need every single document. I need a set of financials that are reasonably completed. We can make adjustments from there. And it's not unexpected that when you receive whatever is in this box, that to a certain degree, you're going to have to make some adjustment of sorts. That's fine. Not everything comes in perfect. We're not looking for perfection here. But there has to be some level of standard that goes along with it if we're really going to be in a good relationship, in a good circumstance, and work together well going forward. So I'm going to start opening up this box, and we're going to kind of go through my shoebox full of sheets and kind of talk about them to kind of give some examples of stuff we might get and at different stages of different business. And, keep in mind, we all start from a box like this at a certain point in time, but we just got to work on getting better and thinking about what we're doing along the way and again, walking in this journey.
It's like the Pandora's box of Mike's office is, I think, what we're about to embark on here. So
That's right.
hopefully nothing attacks you. You don't have like a little Furby that jumps out of there. I've read the gremlins, the gremlins that creep out and, take over your office, but hey, we'll see what's in there. So
We'll
knock,
see.
knock, open up, little box.
Right. All right. So the first thing I'm going to pull out of here is, we get receipts and documents. Just here's a pile of stuff. These receipts, I don't know what they total up to. I don't know what they're for. This is typically something you want to hand to a bookkeeper, not necessarily a tax accountant. They are the ones that are going to help you sum things together and get organized. You can be as organized as you want with receipts, but if they're not systematic and put together in some kind of financial statement format, that's also a problem as well.
That's a great way to explain it. So even if somebody has, I don't know if you remember the Neat Desk scanners. Do you remember those things like 15 years ago? God, I'm feeling so old now. That was like their big thing, right? Like you just slap this little thing on your desk. You could scan business cards. You could scan receipts in it, and it populates basically a spreadsheet. But what you're saying here, right, is a spreadsheet it's really not worth sheets in a sense, unless it's processed or formatted in a way that the accountant can utilize. It's just not a
Exactly.
sheet full of numbers.
100%. Absolutely. They have to be sorted through and understood, you know, and you might, even when you get some kind of systematic financial statement or way of presenting something, you have situations where somebody says, and here's a stack of 1099s. Here's a bank statement. Here's a 1098. These documents, receipts, all the type of stuff that you hand and stacks up. And I have it in person in my hand, but this can, pop up as a bunch of PDFs in a virtual platform or something like that. They have to be managed and understood more at the bookkeeping level than, a more higher level. It's not that we may not need to look at some documentation, but if you find yourself in a situation just providing and providing and providing documents, this is, we're sucking a lot of time into that bookkeeping process. And we need to really understand what goes in there in the first place. And then look at the financials of what actually happened.
Because otherwise, you
That's
just kind of have a glorified handwritten ledger that they used to use in
exactly.
the back room of a gambling hall or something, right? Like it's very similar to that, probably, right?
Yeah. The next one I want to pull out is I call it the back of the napkin calculation. And I just want to say there's a lot of value to writing things on napkins and making quick decisions, because to me that's a part of business. It's super fast and you have to think on your feet, right? And I value that so much. And so I love it when people have these awesome stories of how they wrote something on the back of the napkin and made an awesome decision that changed the trajectory of their business. That's what that definitely happens. That's awesome. But a napkin is not a ledger. It's not a financial statement. And so we have these ideas, or hey, I know this happened, this is the expense or this is the income, and we write it in an email really fast to somebody, or we verbally communicate it. Financial statement is all inclusive of every expense, of every item that has occurred. And even though that napkin decision that you made or happened may be a material part of what occurred, it's not all inclusive. And we have to be very careful in terms of what we're communicating and to somebody that has to really put together a full financial statement with all of the financial data and how that may or may not line up with the back of the napkin calc. And at the end of the day, if you do have those situations where you're running and gunning and you're writing things on a napkin, how does that manifest its way into a financial statement? I've seen a variety of situations where somebody really has this strong conviction that something should be something because they made a back of the napkin calc, and it was based on some really logical things that were happening, and then didn't pan out that way later. That creates a conflict of what is the number?
And so really too with this, what I'm hearing, right, is kind of inadvertently, accidentally, whatever we call it, by handing over the box, the very well organized, stacked, ironed out paperwork in this thing, you're almost bypassing an accountant's role, or I'm sorry, a bookkeeper's role. And by doing that, you're kind of rocking the boat a little bit right off of the gate. We talked about your relationships and value add and all that stuff. It's not really a good way to make it happen. I mean, me and my crazy analogies, it's almost like me going to my wife and say, "Hey, Stace, I found this great recipe. I know you're gonna love it. Let's have this tonight for dinner. But I got it all written down here, but the grocery store is closed. Maybe I'll find this in the back." It just doesn't work, right? So skipping a step, just it's a recipe for disaster. No
It's
pun
less
intended.
exactly. Nice. It's less systematic.
There you go. That's a good way
You
to put it.
know, you can write things down, but you've got to go through A, B, and C and all these steps. You have to get in your example, you had to get the grocery store to get those groceries to make it happen. And it has to be the whole thing. If we're really going to come together and complete that expectation, the full set of financials to get it into the tax return. And at the end of the day, sometimes people will just say, hey, here's my income, here's my expenses. And sometimes it can actually be even faster and easier. But I would very much question that what's behind those numbers and how systematic were you, and that can create conflict later of, well, I never said that. That was, anyways, that's where the napkin can be controversial.
For sure, for sure. How many layers in that box do you got in there? You got a garden growing in there or something too?
2 more.
Oh, man, let's hear them. This is great.
All
I
right.
I love that we're, like, peeling back the onion. Another,
Oh, yeah.
no pun intended now, talking about food, but it works.
Next one is schedules. So what do I mean by schedules? You've evolved past the napkin. You've evolved past the receipts. You have something systematic. You're putting a bunch of really key financial information or data into a system. It could be a really complex Excel sheet that shows a construction project that you're working on and where you're at in different stages of it. That's, if you're in construction, that's a pretty important schedule, right? It could be some kind of system that actually attaches on to your accounting system and says, I should have this many sales from this many customers. You have all the details, something that you really operate from, let's say, a very key piece of data that you operate from. If you don't have a way to take that schedule and bridge it into the financial statements, what happens? The financial statements are wrong. Well, how do I know the financial statements are wrong? Haven't they been reconciled with cash? But my schedule says this. Okay. Well, what if the schedule's wrong? I don't know, but I operate off of this. Well, I don't know if your schedule's wrong because I have the financial statements over here. Look, we're I'm not here to necessarily debate as to which one's right or wrong. All I know is we don't know anymore. And that's a problem. Schedules and other exterior systems outside the financials are critical, and I will always value their usage. But they got to connect into the financials. Otherwise, my accountant brain is going to be like, what is going on? Do you know what's going on? And we're going to have issues.
If you wanna see Mike's head self-implode, just start disconnecting stuff, and his accountant brain will collapse on itself, but by design.
And it's more difficult than you think sometimes to understand where a financial statement connects into these exterior programs which we operate on. Sometimes they're advertised as being very simple, and they're not. But I love them. I love them. I love to use them when they can be tied into a financial statement. They're actually like even better than financial statements. Sometimes I prefer to use them if I can find a way for them to connect into financials. But if they don't agree, we got a problem.
Yeah, then you gotta go back to the basics. It's like doing an operation. Like,
That's
actually,
right.
speaking of remember that game too as a kid, or am
Oh,
I
yeah.
really making myself where you're like trying to pick and choose things without, hitting the sides and the buzzer going on? It's almost like the opposite of what you're doing. Like you're trying to make the buzzer go off a little bit because you want things to connect, and when they
Yeah,
don't connect, you got big problems. See how my brain
absolutely.
works? I come up with random sheet of stuff, and you make sense of it.
Well, you're ticking and tying my explanation to different things, and I like to tick and tie, so, schedules to financial
There you
statements.
go.
So
There you go.
I think you're good.
Good work. Good work. I appreciate that.
The last one, we've come to a place where, you know, where we have financials, and there's lots of people that have, financials or at least doing their best to create them. Sometimes they do it on their own. Sometimes they'll hire a bookkeeper. We're using systems, which is potentially QuickBooks or something like that. And, it could even just be a system that you're trying to kind of do in your own, perhaps in Excel. The better, the more systematic it is, the more higher probability that the financials you provide are going to be good. But I can tell you that even though you can have the best system in the world, but if you don't really know how accounting works, they can be just as bad as anything else too. So that's my next one, is just odd financials here. And so this is an accountant. You talked about my brain kind of blowing up there a little bit. Assets don't equal liabilities and equity. And some of us accountants will definitely get that. Some of us won't. There's just a variety. There's a variety of things that can happen, really. A few that I'll pick out is misusage of a chart of accounts, expenses placed on the balance sheet accounts on the P&L. Some of those things to an accountant would be just very simple, but if you're attempting to do it on your own, you might make these mistakes on accident. I would say excessive use of the financial chart of accounts. I think there is a sweet spot to it. There's no hard rule on it. We tend to create a lot of accounts. We tend to end up actually creating our financial statements into a schedule.
Okay. And when you say kind of not abusing, but whatever the chart of accounts, say you take like meals and entertainment, but then you have one like down to bar tabs, fast food, like you're talking like that. So you start to overly kind of finite break it down where really that doesn't matter in most cases.
That's a good example. Yes.
Unless it's super important for you to say, all right,
Yeah.
I need to know how much I'm spending at the bar here for personal research, we should say, or analysis.
Ring in the proper use of a schedule. Meals and entertainment was $1,000, but I have a supporting schedule and system that shows me exactly what, in more detail, what the $1,000 was made out of. Balancing it out. There is no perfect way of doing that, and every business is different, and it can be highly subjective in terms of exactly how you balance that out. But I would say that at the point in time that you pick up your financials, if you try to print them to one page, and you kind of got to get close like this to look at the numbers, you've gone too far. And you need to potentially understand how to use a schedule and a financial in a better way, because that accountant at the higher level that's doing an audited financial statement, whether it's doing a tax return or a management internal report that's looking at things at a higher level, they don't need to go down to that level of detail. They need you to know it, but they don't need to report and look at it. So if we're squinting to get through this and this is there and that is there, creates a lot of extra work and a lot of extra time that it isn't necessary.
That's awesome, man. Well, thanks for walking us through the box. I think that was pretty clear on how you do it. I had no idea how many layers. I'm like, man, if he keeps digging, we're going to be here all day. We'll see how many of it is, but it's an organized way of showing an unorganized, out of date fashion or unsystematic way of doing things, right?
If you can find a way to just be more organized, more systematic, know enough to be dangerous, you start learning and growing for your accountant and walking in that, partnership together. It, of course, has a lot of odd ways of helping you out in other areas of business that have nothing to do with accounting. So it's a good practice either way to do that.
Awesome, man. Well, thanks for running us through that again, man. I'm all tongue-tied, twisted up, and not an accounting brain, about to implode myself. And helping us, we're getting to know the numbers, literally, right? So, again, man, thanks for taking the time, and I look forward to our chat next time, whenever that should be. So, I appreciate it.
All right. Thanks, Johnny.
All right, Mike. We'll see you, buddy. Thank you.